It's February 2nd. It's not February 2nd. It's February 11th, and this is the video that takes 30,000 to a million. I'm going to teach you how to use stock screeners in case you didn't know about them. I'm going to just quickly go through the account real quick just to put it on record, and then we're going to get right into it. If you want to skip forward, just go to where you see my face like this, and then we'll go through the stock screeners. But first, I want to go through the account real quick. I'm going to be zoomed out today, so if you are, it's probably best to watch this on the desktop rather than the phone, but you can just kind of listen and get the gist of what's going on here. Just as far as the moves on the account goes, my put option exercise, so now I have extra 100 shares of PayPal, so that happened, so I'm gonna have to sell it somehow. I'm gonna just quickly scroll through these are the option plays here, and you can pause the video at any moment to try to figure out the exact positions. All the information you need is going to be on there. These are the equity positions. Pretty bad actually. EBIX was in the green today, surprisingly, and so was Realty Income and Smith & Wesson. Crazy. These are the messages telling me that I have purchased 200 shares of PayPal because I sold 2 puts. Maybe we'll go over that some other day. Today, however, if you want to see the investing tab, here it is. Since I bought 200 extra shares of PayPal, I now have $281,000 under management. That includes 33.94% margin, which is getting up there. I don't like to have margin that high, especially if we have a drop that's going to increase even further, and that's kind of dangerous. So, going back to the portfolio, this is today's action. $5,000 plus, actually closer to $6,000 negative on the day, which parlays from yesterday's drop, quite significant one. I reached a high of almost 199, almost 200,000 on this impulse. So this is the week performance, still in the positive somehow. I don't know, crazy. This is the month performance, negative 8%. 3 months, negative 5%. 1 year is, of course, still plus 17%. All right, now this is the markets at a glance today. Pretty big drops across the board, and my account also slumped like 3%. So I'm in line with everything, but it would be nice to not have such big drawdowns, of course. So that concludes the account review and the market snapshot. So now I'm going to talk about stock screeners. As I mentioned earlier, you may want to have your desktop computer available or a laptop so you can see a little bit more clearly of the numbers. They're going to be small. You can still follow on the phone or some other device, but you're not going to be able to see as much the numbers. You're just going to be basically kind of listening to me what's going on. So I'm going to go on the first stock screeners. I'm going to use 2 of them today, and one on finviz.com. So you can try and click that one. And then the other one I'm going to use is Stock Screener. Stockscreener.com, I think. No, stockanalysis.com. They have a really nice screener there as well. So Finviz is kind of one of my favorites because everything is kind of like, I'm used to it and I've been using it for a long time. Stockanalysis.com is probably a bit better. So when you go to finviz.com, let's click on home. Over here at the top you're going to see a menu. Click on Screener. Now it's going to come up with a bunch of stuff here, and these little tabs control just groupings of technicals or metrics that you want to screen stocks for. A stock screener is basically a tool for investors that kind of sifts through companies, publicly traded companies, with metrics that you want. Like for example, maybe you want something that has a very low price to earnings ratio, price of the stock over the earnings of that stock. And so you would click that metric and find all the companies that fit your criteria on whatever PE ratio that you want. So that's what a stock screener basically is. And there are a ton of metrics that you can use. By the way, did you know that Goldman Sachs has a gold ETF? I didn't until today, and actually they do. They have a physical gold exchange traded fund. This is definitely not sponsored by Goldman Sachs, but it's called AAAU, and I checked it out, and its expense ratio is actually 0.18, which is lower than IAU, which was, I thought, the most cost efficient exchange traded fund for gold, physical gold, sitting at 0.25%. And then GLD is actually 0.4%, which is the most expensive exchange traded fund when it comes to managing that asset. An expense ratio is basically the amount of value that you're going to lose per year for holding your money into that fund. So it's going to roughly track the price of gold. It's not going to be an exact match. Okay, so for example, if you hold, you know, $100 worth of GLD at the end of the year, if there's no price change, for example, you're gonna have 99.6 dollars. Okay, $99.60 in your account. So that's how the expense ratio works. So at 0.18, if you had this Goldman Sachs ETF, you would be holding, 99.82. So over a long period of time, this actually kind of adds up and helps. Back on topic. This is the stock screener. Up here, you're going to find some tabs to kind of group all the metrics that you want to look for. So we have descriptive, fundamental, technical, or you can just click the all tab and you'll see all of them at once. So let's just go with the descriptive tab first. It's things like market capitalization, earnings date, target price, index, dividend yield, etc. Now, what I challenge you to do, okay, is if you don't know what one of these terms means, just Google it. Just Google. That's how I learned about basically everything. Is I just searched on the internet to find the definitions of all these things, so I got familiarized with how everything works. Now, there are some metrics that I probably don't even know how operate in there, but I don't use them. I probably looked them up at some point in the past, and I decided it's not important for me, so I just use it or lose it. Eventually, I just even forgot how it gets calculated, and because it's just not important for the type of investing that I'm doing. But I would encourage you, since it's up there, somebody found a use for it at some point. Since it's up there, I encourage you to kind of look it up and learn what all of these figures mean. So the next tab is fundamentals. This is where, price to earnings, statistical stuff, margin growths, price over sales, etc. And then technical, of course, is simple average, volatility, performance, change in price, 2-week high, etc. All right, so let's take a little bit of an example. Okay, we have apparently 8,577 matches when everything is set to 0. So how about we'll start market capitalization. We'll do a little test run on some companies that we want to sift through. In general, I personally don't want to deal in companies that are too small, so I'm gonna go with over 50 million. And now the search became, look, 5,636 tickers left. Next, earnings date. That's not really that important to me right now when it comes to investment. How about dividend yield? Well, not that big of a deal. Let's leave most of these untouched. Shares outstanding, current volume. How about over 1 million? No, over 500K. All right, that narrowed down the tickers by half. Okay, so fairly frequently traded stocks here. We don't want something that's super illiquid, let's say. Fundamentals, this is where most of the real work is going to come in. So I want something profitable and something not too growthy, let's say, for example. So I want my PE under 50, something that actually makes money, but we're not going to completely eliminate all the growthy companies out there. Price to cash, we're just going to ignore that for right now. Earnings per share growth of over the next 5 years. So this is a projected amount, so we're not going to touch that actually. Return on equity, we want positive return on equity. Debt to equity, we're going to leave that alone for a sec. Forward price, this is a forward-looking metric, so I'm going to ignore it. Price to free cash flow, ignore it. Sales growth past 5 years, I want positive growth. Oh, we're already down to almost 700 tickers. Return on investment, positive. Gross margin, we want positive gross margin. Inside projection, it doesn't matter. Forward-looking statement, earnings growth over the next year. Current ratio, that has to do with debt. We're going to ignore that for right now. Price to sales, okay, I want good valuation here for price to sales, so I'm just going to do under 5. You can see we dropped over just over 400 tickers left. Quick ratio, that also has to do with debt. Net profit margin, positive. That didn't change anything, of course, because gross margin here. Price to book, we're going to leave that alone. Earnings per share growth over the past 5 years. Now, let's say we want something that survived through these difficult periods in the last couple of years and was able to still grow in the past 5 years in their earnings. So that should cut them down. Yep, it cut down to 315 tickers now. Still too many, right? Return on assets, let's say it's positive. Payout ratio, that has to do with dividends. Institutional ownership. Okay, so that's pretty good. Let's go to technicals. Oh, that's not allowed in this version. That's fine. So let's refine. Since 314 is too much, let's refine this a little bit. How about instead of positive sales growth, we really jack it up? Okay, so let's go over 20% sales growth. That really cut it down to 36 tickers. And then how about return on assets be over 5%? And earnings per share growth over the last 5 years is over 5%. So we're down to 24. Return on equity, maybe over 15. Consider 15 symbols. Well, I already see some companies that I have noted before. So for example, Vale or Vale, the Brazilian basic materials company producing steel and stuff like that. Also VIPS, a major holding of mine. I don't normally look for these type of metrics. This is new, so just by the way. So how about we look at this PEs and we'll try to figure out maybe something that makes a lot of money here. So this PE is actually 2. LX Financial, look at this. So we're going to try it out. It's a Chinese company. Too many Chinese companies. How about a US company with low PE? China again, China again. We can see here USA Mortgage Finance Financial. Okay, PFSI. I'm going to click on it and see what's going on. It had a recent drop. And then these are its metrics. So price to earnings 3.42, forward PE, price to sales under 1. That's great. So its market cap is 3.5 billion. Its sales is over its market cap, and then it made a ton of income off of that revenue. Therefore, its margins must be really good. And if you go over here, you can see that the margins are actually really nice. Return on equity is 45, which is crazy. Let's see what the analysts think about this stock. Target price is 87. It's currently sitting at 61. Okay, so undervalued relative to what the analysts think. I don't know how many analysts or how they come up with that average, but still, that's not too bad. Operating margin, profit margin is huge. I mean, this is incredible. 40%. The return on assets is a good number to look at, which is 6. It's not bad. Okay, so this looks good so far. Maybe we can take a look at this company and the other website, and then after that we can go through the screener of of stockanalysis.com. Was it? What was it called? Anyway, let me remember seeing PFSI, stockanalysis.com. So I'm gonna go here. Let me switch back to the browser. PFSI, PennyMac Financial Services. I always want to read a little bit about the company to figure out what the business is in, what are they doing, and how risky, or maybe you have some insight on the type of businesses they're doing, and so maybe perhaps I don't think it's a good company. So PennyMac Financial, through its subsidiaries, engages in the mortgage banking and investment management activities in the United States. It operates through 3 segments: production, servicing, and investment management. Okay, the production segment is involved in organization, acquisition, and sales of loans. It sources first lien, residential, conventional, and government-insured guaranteed mortgage loans. Okay, so government-insured mortgage loans, that's good. The servicing segment engages in the servicing of newly originated loans and execution and management of early buyout transactions. Okay, interesting. So they mainly do servicing though, so I don't think they hold these government-backed bonds. They probably just offshore them to like Fannie Mac and Freddie Mac or Fannie Mae. So we're gonna keep that in mind. These are some quick statistics here on the left, and analysts think it's a buy. They actually have a dividend of 1.31%. It looks like target price is 42% upside from here based on analysts. We're gonna go to the financials. Just check out this company real quick. Visual graph. They had a huge boost in revenue lately. It looks like cost of revenue is also coming up, but not as high. Gross profit is just skyrocketed. So this is a recent success, this company. Earnings per share diluted, okay. Wow, they had a really nice 2012, didn't they? In earnings. Okay. Let's see the dividend growth. All right. Operating margin. We can click on the dividend tab to try to figure out more about its dividend. It looks like it's pretty inconsistent. They had some good years, then they went down and now back up again. Payout ratio is 4%, so almost nothing compared to how much they make. So I like to look at the statistics tab and to figure out number one coolest thing you can do here is figure out the market cap and enterprise's value. So you can see that market cap is 3.47 billion and the enterprise value is 17.9, so almost 18 billion. So that means if the enterprise value is higher than the market capitalization of the company, that means they have a ton of debt. So this company is very, very, very leveraged, so it's a little bit difficult to, you know, if they run into hard times, it's going to be trouble. Thankfully, they're in a pretty safe market where, you know, dealing with government-backed mortgages, it's not, you know, it's not that risky. But I don't know how I feel about, you know, investing in such an over-leveraged company, especially that it's not that enormous. Okay, so that's it about the company. So PennyMac Financial Services. Now let's go to the home. Let's go to stock analysis site, and you can search for symbols, but you can also do the stock screener. So your stock screener is over here on the left. Let me see if you can see it. It's on the left, so you click on the stock screener, and I think this is a better screener than finviz.com actually. You can look, these are the tabs here on the sorry, Freudian slip. These are the tabs of metrics that you may want to consider. They chose to sort it by popular, company, financial, valuation, dividend, and other. And then, of course, you can do all of them. Let's start with the popular. Market capitalization, it's a little bit easier to understand. I want something that's over 300 million. Dividend yield. All right, let's not do dividend yield. Let's hope for something more growthy. Okay, so P/E ratio, I'm not gonna touch it. Industry doesn't matter for right now. Analyst rating doesn't matter. Forward PE, volume, price target. Okay, so something that has over 100k volume. We'll leave some more opportunity out there for exploration. So how about not a SPAC? Exclude SPACs. It's a nifty trick here. It doesn't matter on what exchange it's traded on. Doesn't matter what year it's founded on. IPO date doesn't matter. Okay, financials. Now this is where the real work comes in. Revenue. I want a company, let's say, that's got huge revenue, so over 1 billion at least. Gross profit growth. Oh, how about over 50%? All right, look at this. We're already down to 281 symbols. Net income growth over 0. Let's just do over 0. Net cash flow over 100 million. All right, so that down to 70 now. Free cash flow over share over 0. Net cash growth over 5%, down to 18 names. Gross margin over 0. This is going to be no change. But I'm just going to put them anyway. Cash flow, market cap, operating margin. How about over 5%? Over 10%? Over 50? Over 20%? Okay. That's good. Operating income over 0. Revenue growth. How about something that grows over 20%? Over 50%? Okay. Then revenue of over quarter over 10%. How about something that's done really well recently? Over 20%. Okay. Earnings growth over 0. How about over 5? So I want profitable companies that are growing their earnings and revenue. It's basically what I'm doing here. Okay. Profit margin. This one won't matter too much. We already did the gross margin over 0. That's fine. Gross profit over 0. Obviously, it's going to be over 0. How about 100 million? 1 billion? Okay, we're really down to 5 names now. Okay, so look, we sifted through a lot of metrics. We're looking for something that's growing, both in earnings and revenue. And so we've come up with these names. Now, analyst ratings are all biased. That's a positive sign. One of them is a hold. Price earnings ratio is really low for a couple of these companies. Look who we have here, actually, Zoom. Isn't that interesting? So Zoom is is growing pretty hard. Look at this, at 100% revenue growth year over year. Revenue growth in the quarter. It looks like Regeneron Pharmaceuticals. Now, pharmaceuticals, I like to stay away from them because they're really inconsistent. They're really rules-based. So I just automatically exclude pharmaceuticals from any more potential plays. So Zoom is an interesting one. SVB Financial Group. Okay, revenue 6 billion. Revenue growth 4P21. Market capitalization is fairly big company. And then we have HLI, Houlihan Lokey. I don't even know what that is. Okay, so P ratio 15. It's a whole 2.3 billion of revenue. A lot of revenue growth in the quarter as well. Gross profits big. Operating income okay. Net income growth 73%. Plenty of cash flow. Big cash flow. Ooh, look at this net cash growth here. Okay, so these last two. Louisiana Pacific. How about this HLI? Let's find out more about this company. This is the first glance at it. Price to earnings ratio 15. Dividend, they pay out 1.5% dividend. Price tag is 119, currently at 108, so pretty close to what estimates of analysts say. Let's look at the max chart. It looks like a very steady trend growth upwards. Now let's find out a little bit about the company. It's an investment banking company, okay, interesting. Provides merger and acquisitions, M&A, okay, very good. capital market, financial restructuring, and financial and valuation advisory services worldwide. It operates in 3 segments: corporate finance, finance restructuring, and finance and valuation advisory. Corporate finance segment offers general financial advisory services and advises public and private institutions to buy-side and sell-side transactions, leverage loans, private mezzanine debt, high-yield debt, initial public offerings, etc. Okay, so it's basically like Goldman Sachs, like a little Goldman Sachs, it sounds like. All right, so let's see what's going on with their financials here, okay? Just a quick glance at the graphs. Oh, this is really nice here. Look at this revenue. Great. Revenue growth, gross profit, baller, huge acceleration lately. So they're really doing really well lately. Pre-tax income, this is good. See shares outstanding. Okay, so they did increase their shares outstanding a little bit, but that's acceptable because they're really growing at an incredible rate. So maybe they're using the money effectively. Excuse me, dividend per share. Okay, the increasing dividend is great, although from 2018, 19, 20 is slowing down, which is fine. Gross margin, holy crap, look at this. I don't know how accurate this number is. What's going on here? Operating margin, so this is kind of a red flag here a little bit. This upper gross margin at 100%. Alright, so these are the figures at a glance. Let's do statistics. So you can see that the market cap of this company is bigger than its enterprise value. So that means that the company is holding cash instead of debt, which is interesting because for a business like this, I would expect them to actually hold some debt. We're going to go into some further statistics to try to figure out what's going on here. Price to sales is 3.18, okay, 2.8. All right, cash flow, $14 free cash flow per share, not bad. Margins are killer. 32% return on equity and 19% return on assets. 84% return on invested capital. That's pretty large. Now this is still the red flag for me, but all these margins look really, really nice. Effective tax rate 27.67, so they pay a lot of taxes with their model. Let's take a look at the dividend real quick. So I'm scrolling down to the beginning. It looks like they've been increasing their dividend steadily since December 2015. So that's great. I mean, look, this is a really good pick so far. I would actually, think about investing in this with maybe a little bit more research here. So payout ratio is 22.4. They can cover it easily. Dividend yield. Let's take a look at this company on Finviz real quick, just to see everything at a glance. So HLI, very interesting. Weird name though, hey? Let's take a look at the monthly chart. Oh, I hate when it does that. Alright, well, that's that. Look at the numbers. So 7.24 billion, sales of 2 billion, income of $500 million, landing it at a price to earnings ratio of 17.24. But as we found out, this is growing. So these are the margins at a glance here. Very good. And it looks like the stock is performing fairly well. It even has some upgrades by Goldman UBS over here. But, maybe don't take too much stock into that. Alright. Well, we found a little bit of a gem. I might have to do some more research into it and find out some news articles. When you click on the overview, actually it gives you some news articles here on stockanalysis.com. So you can see that they topped estimates in Q3. And this is a sponsored one, obviously. Okay, so there's some pro articles for HLI. I like this graph over here too. It tells you the revenue and earnings, and you can see how big it is in 2020. So this is very much investable. I have to go through all the articles. But anyways, that's how I use the stock screener. Hopefully you guys got some value out of that. And if you have any questions about the stock screeners, let me know. I'd love to answer them in the comments. And plus, maybe there's some insight that you want to teach me. So if you have something about stock screeners that you think I'm missing, then please comment so I can apply it to my own investing. All right, I think that's it for now. Talk to y'all later. Peace.